Interestingly, the downtrend has noticeably weakened through the 70s, where there was a historically high amount of large trading volume in the mid-2010s, as well as being near the deeper point 786 fib retracement level, along with multiple intersections with a fib time zone placed at key points along the established downtrend. Then, in the medium to short term, there's also been the emergence of a clean green bull hammer candle that was preceded by average to above average volume, though that's not enough to say DG will recover from this super slump. Next, it would be better to have the following conditions displayed with these indicator values, starting with ALMA crossing back over MA, CCI going back over 100, Bollinger Bands %B reaching 0.75 or higher, while a rune lower falls back under 30 and a rune upper rises over 70. Then a more decisive long-term recovery can be declared. For more on the fundamentals of a bullish and bearish hypothesis, please refer back to the previous video on Dollar General. For more on the techniques and tools used on the charts, as well as coverage of other companies, follow Ascencore. Thanks for watching and have a nice day.